Welcome to the Forex, and here we're looking at the US dollar, and like the euro in the mirror opposite, we are looking at a five-wave pattern here in terms of the 1, the 2, the 3, the 4 and the 5 up through to here. So we can at minimum expect some type of ABC to come back here before we see any upside here. The other sort of point here that sort of needs to be sort of considered at least is that the spike here, and the same with the euro on the opposite edge as well. If we just ignored this spike for a moment and then took this pattern here and placed it sort of here as such, so we've had that sort of straight run through here, then we can also consider this a top being in place here instead of this spike through here. So this is on my mind as well. So the move that comes down from this high area through here is paying close attention to see if it's in 3 waves and moving back up here and taking this low out here to create that ABC here, or looking at a 5-wave sequence here. Same for the euro as well. The same sort of spike here as well. So in this case here, you can see that I've just sort of ignored the spike, put the wave 4 here rather than over here and calling this the low, and then looking at the last 5-wave sequence to come down through here. So with that in mind, we've also got the 5 waves here to make up wave 5 of C here. So we could have a turning point around here. It's a bit of a long shot what I'm talking about here, but look, the other side to this is, as I just mentioned with the US dollar, a move up through here in 3 waves, retesting supply at 136 basically, anywhere from 135.80 to 136 sort of area here. Yeah, look, if we can get a clean 3 waves up here as such, and then getting overlapping wave structures, then you've got a corrective move and we'll be coming down much further. But a clear 5-wave structure up here and support back on the 136 here would make this count here right. So just basically putting 2 counts on the table. This one that I've got here, putting a wave 5 of C here, is a little bit iffy, because it's not really including the comments that were made here. Should they be in, shouldn't they? It's sort of a little bit debatable, but in both cases, I think we need to take them both on board, because also too the 135 has got a lot of support in the market, mind you. In the bigger picture on the daily, the 61.8 retracement levels is further down, but there is good support here for this. So yeah, look, let's just see if we get a 3-wave price action back to here. So you would only go long anyway if you had support on this level up through here. The Australian dollar, it's quite good really, because when I was looking at this morning, we didn't have a close above this particular trend line through here, and that would be, I figure it's going to happen anyway, but it's just good to get that close above there. It kind of locks it in a little bit, but as you can imagine, approaching an old high would have all the indicators suggesting overbought as well. You may have a couple of long positions in here, and that's fine. The next place to add to this would be a more developed picture across the 94 here as such, as a sort of supporting thing. You'd only be burning up time if you got long here, because if we had a move up here further, maybe even back here as such, before we even got a move up even up to here as such. So it might be, I'm just sort of giving a very conservative time sort of frame here for this to do that. But yeah, I mean, it won't take that long in terms of months or whatever, but just that particular pattern approaching the 94 sort of area here. And I've also been conservative with the wave count up here as well, and still being conservative. We could still make a high above this 5th wave here. The trend is still up. It's in the channel. It's all good. We know that there's supply and resistance up here. We're really waiting for that supply to, that resistance to show up, and then eventually one day have it as support, from resistance to support. And it's a process and it takes time. The wave count that can go higher from here is pretty much including this B wave here is up for 1, 2, and back to probably, well, straight into here really. well, oh no, back to here as well. So the account can be adjusted to go sort of further up. But I think one of the main points here to sort of to note is that, you know, this is the beginning of a trend, the building process, and this is the middle of the trend when everybody recognizes that it's going to pop to the upside and all the volume comes in the third wave and everything. So you've got the beginning, the middle, and the end of the trend. So, you know, there is an end here, you know, and there is going to be resistance here, and it is over, you know, bought into this particular area through here. You know, we can bring the stop up into this sort of level through here, but, you know, you may even want to, depending on what your strategy is, if you're going for the longer term, because what we're also looking for here too in the bigger picture is a move above this this B wave high here at 94.08, I think it is here, thereabouts, yeah. So a move above that there would confirm that this is an A and a B and a C wave here, and then we'd be looking to go higher, and would be looking at the count in terms of, you know, up for 1, back for 2 here, third wave, fourth wave, fifth wave, A, B, and C here, and then sort of up from that point there. So we can go from where we are, because we've got long positions down here, and the main aim was to get up to 95 here, you know, to track those larger 5 waves up through to here. So anyway, that's what, depending on what you'd like to do about that. The euro being weak has made the and the Australian being strong has made the euro Aussie weak, and I've just got it on the weekly chart here, and the main reason for that is because we're looking for well, you know, we're basically correcting across the medium level here, 150. So we've got the classic trading levels pattern here on this large scale. We've got the arrival, the reaction, the first high above the level, and now we're in the correction part of it. You know, how the correction is going to pan out, you know, is a bit of a guessing game until the first leg is sort of done and dusted. But the wave 4 that we're looking at here, from intermediate wave 3 here back to intermediate wave 4 here, would be looking for 38.2 retracement level, or the wave 4 of 1 lesser degree, which comes back in around the 140 area here. So now that we're under the 145, which is the halfway mark between these two numbers, then the weight shifts down to this particular number here. So we can be moving lower into the 140 area here. There's different ways to label all of this here. Not that it matters that much, but it is, you know, moving down reasonably, you know, quite strongly, and you know, so it'll be interesting to see how the euro US dollar kicks back as well. But the indicators for this market on the monthly scale here is suggesting that it's got further to go down. I mean, the 140 area is only the 130. You know, is you know, it's just the first sort of stage of it, really. So look, there's going to be bounces at 144, 72 and 72, 144 and 143 and 142 and 141, and that's just the way the cookie sort of crumbles, really. So yes, in terms of counting this down, the count would still pretty much be down for 1, back for 2, 3, 4 to here, and then we're just seeing this fifth wave extend down through here as well. Let me just check on this here. That's 8 points. That's 5, 6, 7, 8, about the same. Okay, but this is obviously extending down, so we can look at this here in terms of wave 1, 2, possibly 3, 4, and 5, something of this nature here, and that's the way that I'm sort of looking at it here as well. Just on the 8-hour chart here, down for 1, back for 2, down for 1 here, back for 2. Looking at the third wave, down the fourth wave, the fifth wave, and it'll get quite bouncy in amongst group 1 here, as you know. So, but we're going to have to bring the 144 into it in this particular case as well, because there'll be some support there, but yeah, this structure is definitely suggesting lower. Now the pound yen and the euro yen, looking at the pound yen first. Right, well, The pound is a little bit stronger than the euro, but this pound is still coming down as well. We're expecting a correction at the 172 there, and it's moved quite swiftly, really. So the 50% retracement level is 171, and the 61.8 is a little bit 170.65 area. So we can expect that to continue to move down. It appears that we've got the beginning of the trend up here, and we've got the middle of the trend coming in here. So we still need the ending of the trend, so to speak. So there will be support coming into group 1 here, which is 171. 30, 20 and 10, so expect bounces through here. What you see here is not necessarily what you get over here in the next leg, so to speak. So the way that I was counting this is, well, from the high here, I was looking at this first move down through here, and I can see that we got from this B wave here, got 1, 2, 3, 4, 5. That counts quite nice as 5 waves here. This here would count quite nicely as 5 waves. So it's really like we've got 3 waves here. That's why I've called it an A wave, and the B wave over here, and looking at the C wave here, and the C wave would be 5 waves down for 1, back for 2, sharp and swift, back for the 50-60% retracement level, and then 5 waves in this little move for wave 3 here. Wave 4, even though it overlaps wave 1, I'll stay with it for the time being, but basically looking for an A and a B and a C here, and then down here again. So we're still looking for one more little push up here. So an A, B and a C wave back up here somewhere, and then a move down into 171, which is the 50% retracement level there, and 170.65 is the 61.8. So the daily indicators are suggesting even further down. So let's just see how it looks once it's down at the 171 area. The euro yen, right, daily chart. We had support at 140, now we've got resistance there, and I'm just sort of looking at it just from this particular high here, because looking at it's down for 1, back for 2, down for 3, back for 4 and down for 5. So I'm expecting a new low below these this low area through here. And the indicator here, the slow stochastics, would suggest that would be the case as well. So looking for further lows below the 138 here for this market. Alrighty, well, that's it. So yeah, look, it's sort of revolving around that euro and US dollar again. But we're still a little bit sort of unsure, but the euro is suggesting further downside and the US dollar further upside. But, we just need confirmation on that. Those spikes in the market have really, have really moved it around a lot. So just looking at the US dollar here again, it can fail after this 5-wave structure here. It could fail from here and just move straight down from here, because we've got our 5 waves. If we ignored this here and place this structure onto this place here. So, but anyway, look, the main point here is that we need to treat it as being positive because it's above the 80, it's above the 80.30, and it's above the 80.50 here, and now it's going to be retesting the group 2 here, and support within group 2 after a retest will set the target above 81 here. So that will be quite interesting. And also too, if if this is correct and we've got 5 waves here and we do get a counter trend here, then it will be quite strong, because we would have to look at this then as wave 1 to here, wave 2 to here, wave 3, 4 and 5. So that's the way that would pan out. So whatever happens here, if there is a corrective pattern here in 3 waves and then we take out the high here, then this is what we'll be looking at. So we'll be looking at a much weaker euro and a stronger US dollar. Okay, cheers.